Nvidia surge continues after topping revenues and sales estimates as the AI frenzy continues. As the company capitalization rose above the astonishing 2 trillion mark to 2.19 trillion, almost doubling since the end of 2023, overtaking Amazon, Alphabet, and Saudi Aramco. Nvidia, $277 billion increase in the market cap the day after the earnings release, the largest one-day gain for any company ever in the history of financial markets, led investors to increasingly worry about the risk of Nvidia being a ticking bomb ready to explode. So, today we wanted to try to answer to one very simple question that comes to our mind looking at this chart. Is Nvidia a bubble? Welcome to JV Market Insights. Is the trend we're seeing mirroring 1995, when the Nasdaq started its stellar run, or 1999, the last year of tech big gains before the bubble finally bursts? To better understand where we are as a starting point, here we have a comparison between Nvidia, taken since 2020, and Cisco, taken from 1996 to 2003. By looking at how closely Nvidia is tracking what happened just before the dot-com bubble, the first conclusion we might reach is that it is just a matter of time for a new bubble to burst, with not only Nvidia, but the whole tech sector, close to experience a very sharp correction. On top of this, a key element that supports this is that investors' confidence is currently at one of the highest levels in a long time. A very important red signal, often raised by the bubble believers, is the fact that other US tech companies are witnessing a significant increase in share prices after Nvidia record earnings, despite not having any link to Nvidia. What we are seeing is just a tight lift across the sector, which is pushing the S&P 500 higher above its historical highs. If this correction in the tech sector would materialize, US equities would halt the rally and enter into a severe market crash. To understand the impact, this is how the weights of the S&P have changed over the last 20 years, with information technology weight increasing from 16% in 2002 to 29.8% in 2024. Nvidia, unprecedented meteoric rise, made it not only the third largest company in the US in terms of market capitalization after Microsoft and Apple, but also bigger than most of the world's economies based on GDP. Its capitalization is currently the largest than any country's GDP but 10, according to the latest IMF data. Comparing a company capitalization versus a country's GDP is not a perfect and 100% correct comparison, but I thought it tells a lot to put them together. So, is Nvidia a bubble? Short answer, in my opinion, it is not. Looking at valuations first, while the current price to book is over 50 times, roughly twice the average multiple for the last 5 years, this multiple does not really tell much for a company like Nvidia. Looking at the price to earnings, which is in my opinion the right starting point to evaluate Nvidia, we have the trailing price to earnings at 72.6 and the forward price to earnings at 35.7, with the latter significantly below its 5-year average of 41.6 times. In terms of growth, none of the Magnificent Seven names even comes remotely close to the 81% revenue growth and 84% earnings growth that Nvidia is expected to report in fiscal year 2025. Robust profits from some of the tech large caps brought the extremely high valuations lower. Despite remaining overall stretched, they are significantly lower compared to their previous peaks. The so-called Magnificent Seven stocks are currently trading near their average price to earnings ratios since 2015. Moreover, the multiples of the current 5 largest stocks in the S&P 500 are trading at less than half compared to those of the largest weights in the index in early 2000. On top of this, the Magnificent Seven price actions have diverged since the beginning of the year, with Tesla and Apple lagging, highlighting sizable declines on the year-to-date basis. While tech companies during the dot-com bubble were valued using inflated, if not questionable assumptions, in the case of Nvidia, the growth appears to be very much real. A structural change is taking place, and the integration of AI into both our society and the global economy is still at its very early stages. As Nvidia controls 80% of the high-end chip market, the stock will be one of the companies benefiting the most from this new era. As shown in a recent report released by the IMF, advanced economies are currently the most prepared for the AI integration and have the largest share of employment highly exposed to AI. So, if in the short term, advanced economies will be the main actors in this revolution, as the technology evolves, it will increasingly embed it into our society at global level, which is a clear long-term tailwind for Nvidia and peers. I agree that it's extremely difficult for any mega cap stock to continue to grow at this pace. So is for Nvidia as well. However, as the stock is currently just short of the 12-month median target price of $901, it has to keep exceeding analyst expectations to sustain this price level, which is, in my opinion, likely to happen over the next year. Based on Bloomberg data, 90.9% of analyst recommendations are buy, 9.09% hold, and 0% sell, which I think tells a lot about the general consensus in the market. Nvidia is among the cheapest stocks of the AI narrative, despite the strong rally. To conclude, I think we will have some ups and downs, but in the longer run, the way is only up. Let me know in the comments what you think.